Since 1934, Iowa's farmers have turned to the Iowa Farm Bureau spokesman as their trusted news source. Now, the Spokesman Speaks. Listen in and hear from leading experts on topics important to farmers and agriculture. Now, here's your host.
Welcome to our April 24th edition of the Spokesman Speaks podcast. I'm Andrew Wheeler, and this episode features conversations on two topics with direct ties to your farm business: the stability of Iowa's banks in the aftermath of Silicon Valley Bank's well-publicized collapse, and the status of the 2023 Farm Bill. We'll start with a conversation about the stability of Iowa's banking system, and for that, we bring in John Sorensen, who's the president and CEO of the Iowa Bankers Association. Spokesman editor Tom Block had a chance to visit with John earlier this month.
John, thanks for joining me today. The collapse of some high-profile banks such as Silicon Valley Bank in California and Signature Bank in New York has people asking questions and wondering about the stability of the banking system. Can you summarize the factors that led to those bank closures, and if there's any lingering impact or concern for Iowa banks, particularly those rural banks that serve the agricultural community?
Yeah, good morning, Tom, and thanks for having me on the podcast. The vast majority of our banks in Iowa are farm banks, and so whenever we get the opportunity to participate in any way with Farm Bureau and your programming, we are thrilled to do so. So again, thank you for having me. I think when it comes to the turmoil in the financial markets, especially regarding Silicon Valley Bank and Signature Bank over the last 3 or 4 weeks now, first of all, the calm seems to have returned to the marketplace, which is good. I think the reason that happened, Tom, is people came to the realization that these are pretty unique financial institutions. They were, and I'm going to focus a little bit on Silicon Valley Bank now because that was the larger of the two. They were fast growing. Their assets grew about 187% in 3 years. Very unusual. Usually something that gets you a good deal of regulatory scrutiny. They served niche markets, typically venture capital funded, tech, biomed, crypto activities made up the majority of their customer base. Not that those are bad, but when the Fed started increasing interest rates, made funding for those types of companies a little more difficult. And so it's a more volatile customer base that they dealt with than what we have here in the Midwest. And their funding was concentrated. It came from large depositors, principally. Over 90% of their deposits were uninsured deposits. Very different looking than your typical Iowa bank. They had unrealized losses in their investment portfolio, which exceeded what a typical bank would have. It exceeded their capital. Highly unusual again. Not uncommon when the Fed increases interest rates rapidly. Typically, the value of that bond portfolio is going to drop if you had any length of maturities on those bonds. But most banks manage that in a different way, providing some kind of hedge against that interest rate risk. In this case, it did not happen. All of those are regulatory red flags, honestly. And I know the regulators were working with them to address them, maybe should have acted more quickly. I'll leave that up to other prognosticators to determine. But clearly, then they ran into the issue of a run on the bank. A lot of those deposit movements happened through smartphones, and a lot of it was caused by venture capital funds telling their startup networks to do the same, to move money. So $42 billion moved in one day, Tom, in this particular financial institution. Highly unusual. Yet something, as an industry, we need to be cognizant of going forward, that funds can move much more quickly today than they have in the past.
Yeah, you mentioned there are some differences between the banks that we deal with here in Iowa. Can you describe a little bit how rural banks that the farmers deal with are different from these banks, both in the investment strategies that they utilized and in their management structure?
Yeah, good question, Tom. So Iowa banks, as most Iowans know, they're relationship lenders, right? We have relationships with our businesses, our farms, our local communities. We are funded principally through local deposits, and we lend locally. So again, different business model. In Iowa, our level of uninsured deposits on average was 17%. That's 17% on average as a state compared to 90% and significantly higher in the other banks that we've talked about as well. So just like Iowa farmers can hedge commodity price volatility, banks can hedge for interest rate volatility, and most banks do that. Asset liability management is foundational for a bank. Many banks routinely stress for deposit outflows. The other new tool that is now available for all banks, if they need liquidity, the Fed has created a new lending facility, which will be very helpful. Allows banks not to have to sell any portion of their bond portfolio and obtain liquidity and funding. They'll be able to value those bonds at par. So that'll be a nice option for banks going forward. The other thing I will tell you, Tom, without getting into a lot of the data, because there's plenty of time for that, but we had a meeting just recently with our Kansas City Fed FDIC regional individual, and he said bank ratings in Iowa have never been this good. We have the fewest number of problem banks. 97% of Iowa banks are rated in the two highest classifications when examining capital adequacy, asset quality, management earnings, liquidity, and sensitivity, which is our kind of benchmark. So I think your listeners can feel very comfortable about the state of the industry. And if they have any questions about their bank, they should definitely stop in and visit with them.
From a consumer perspective, you mentioned the insured portion, and most accounts are insured by the Federal Deposit Insurance Corporation, or FDIC. What does that insurance cover exactly?
A couple of things here. One thing that your listeners should be aware of, and I think most are, is that the Deposit Insurance Fund is funded by the banks. It's not funded by taxpayers. Banks pay annual premiums into the fund to keep it healthy. There's $128 billion in the DIF fund right now, so it's adequately funded, and that covers up to $250,000 per depositor. But your listeners also need to know that more coverage can be obtained by maximizing your account categories, whether that's a joint account, retirement account, what have you, and the depositor should talk to their banker, but also their legal counsel, because depending on your account structure also can affect your estate planning as well. So it's not as simple as saying, well, you can go in and increase it to X. Each individual is different based on their needs and the types of accounts that they have. So it requires you to go in and talk to your banker about what options you have. Many banks also have arrangements. They're called reciprocal deposit arrangements, where you can spread, if you have deposits over $250,000, you can spread that amongst multiple banks to get it all covered. Or they have sweep account options as well. So again, those are things you should go and visit with your banker about if you are concerned about that.
You mentioned a lot of great strategies there. Are there any other ways that consumers can protect themselves and their assets in case they're concerned about a bank failure?
I will tell you, Tom, the bank is still the best place to have it. Not many other entities or places where you can put your money has FDIC deposit insurance. So it's still your best place for safety and soundness. And I would just encourage, again, you to go in and talk to your bank if you have any specific questions about that.
And there are ways, as you said, you can set up different accounts to increase the total insured level.
Yep, that's right, Tom. You can.
How can consumers stay informed about the financial health of their banks?
Bank financial information is very public. They have to file quarterly reports with their regulator, the FDIC, which are available to the public. They can go online at the FDIC.com site and review financial information on any bank they would like. Publicly traded banks obviously have other reporting requirements that are available even sooner. And so, again, that would be the best overall option for you. But you can go to your bank as well and ask for specific information on their financial situation.
Now, I have sort of a two-part question here. Back to the bigger picture at large. What safeguards are in place to keep situations like these recent collapses from happening again? And are there any regulatory changes or reforms that you think would help provide more stability to the banking system?
Yeah, good question. I mean, in our view, the regulators really had the tools to address this. Maybe didn't act as quickly as they should have. But that's Monday morning quarterbacking. That's easy to do. The Federal Reserve is doing a review of their regulatory procedures in this case, and are going to report that to Congress. So that might tell us a little bit more about whether or not that what they did was inappropriate for that bank. But I also, regulators have the flexibility to revise regulatory requirements based on the risk factors of the bank. And no doubt that they'll be paying attention to that, especially from a liquidity standpoint moving forward. So we'll likely see changes there. There have been many other items discussed in Congress as far as are there any laws that need to be changed. We don't believe that's the case here. The other thing that has come up is, is deposit insurance reform needed? Is 250,000 still the amount of deposit insurance coverage? So I'm sure there will be continuing debate in regards to that. Just one other item that I think would be of interest to your listeners. I do think community banks will be relieved from the requirement to contribute to the losses in these two banks. If they do, I think it'll be very minimal. I think the majority of it will fall on the larger institutions as far as replenishing the fund here. At least that is what we're hearing from the White House, the Treasury Department, and even other members of Congress. So we'll see how that plays out.
Very good. We'll keep our eyes open to that. If we could turn our attention to the broader economy for a moment, and the ag economy in particular, we're all faced with the interest rates that are much higher than they have been here in recent years. How are those higher interest rates impacting lenders and borrowers? And what's the outlook on interest rates for the rest of the year?
The second part of that question is always a difficult one to answer, Tom. But I was actually with the Iowa Corn Growers Association. I worked for them back in the 1980s. We all lived through that difficult time. And I think what it taught our farmers and our farm lenders is focus on the fundamentals. We're going to see changes in interest rates. We're going to see changes in asset values and commodity prices. But debt service cost is a component of the overall operating costs of our farms, but is one of many. And we're seeing other input costs go up. Having said that, our farm net income and earnings are still strong. Commodity prices are strong. Land values remain strong. So there's a lot of very good things that going on in agriculture today. And I just think because of our history, and we've been through a few crises, and I think our Midwestern sensibility would say, you know what, don't let that disrupt the way you look at your farm operation, or as how a lender evaluates that. Continue to focus on cash flows, working capital, the fundamentals for both of us that make for a positive operation going forward. I think that'll continue to be our mode of operation moving forward. Now, as far as what interest rates will look like in the future, many people now believe the Fed will pause. We're seeing some better inflation reports coming out. We're seeing the economy slow a little bit. We all like that to be a soft landing. But we could be at a point where the Fed, if they don't, maybe another 25 basis points, but could be at their May meeting, they decide this is the point to pause. And then, some believe then rates might actually start to trail downward towards the end of the year. I'm not guaranteeing that. I'm not that smart, but I do think the market believes that.
Yeah, as we know, there are no guarantees. John, you've given us some very interesting insights. Is there anything else you'd like our audience to know about the banking system and Iowa banks in particular?
Yeah, well, I would just say it's intuitive, but, Iowa has typically been an agrarian-based state, always has been, always will be. We've always had a decentralized economy. We have more banks per capita than any other state in the country. We have a great diversity in our banking operation here. Our banks today are strong and resilient. They know the Iowa economy. They know the agricultural economy very well. And it's been time tested for a long time. So I think we're in a very good position in our state, and we do appreciate working with our farm customers and Farm Bureau, and we'll continue to do so for years and years to come.
Thanks, John. It's good to have an expert reassure us that Iowa's banking system is on solid ground and explain the differences between Iowa banks and some other banks outside of the state that have been making headlines for all the wrong reasons. It's clear there's a mutually beneficial tie between Iowa banks and Iowa agriculture. Next up, the Farm Bill. Farmers have lots of questions as Congress begins work on the 2023 Farm Bill, and joining us with the answers that we know so far is Daniel Heady, who's the National Policy Advisor for Iowa Farm Bureau. Tom Block visited with Daniel earlier this month, and he'll take it from here.
Daniel, thanks for joining us today to talk about the 2023 Farm Bill. What's the current status of the process, and what are the major issues that are being discussed?
Yeah, so I think, as far as current status, I think both the House and the Senate are really in listening mode. They're really kind of doing some oversight. How did the 2018 Farm Bill operate? What are the issues? What are successes? Kind of where things stand, trying to get a current assessment of how the 18 Farm Bill functioned and what changes are needed for this new Farm Bill. They've been doing that since the beginning of this last Congress. I would say they're hopefully pretty close to putting pen to paper on the new Farm Bill, but both sides of the hill are kind of working alongside each other, but not necessarily with each other. So they're both kind of at similar stages in the process, but certainly not talking to each other quite yet, which is pretty typical for this time. As far as major issues that they're talking about, really the biggest issue right now is how many dollars are going to be available for the Farm Bill. The 2018 Farm Bill was a little under $900 billion. The projection for this next Farm Bill is $1.5 trillion. That's a huge jump. It's not something that really makes things easy because that's a big number. 1.2 trillion of that alone is just SNAP funding. So we're really trying to figure out how much money is available, for farm programs, and how does this all play into the debt limit and spending deals and all of that. So it's really tough to put pen to paper if you don't know what the price tag is going to have to be. So that's really where things stand. I'm sure that's clear as mud, but that's kind of how we feel on this end as well. So.
And that's really the case for a lot of things in Washington. You just have to always be on alert and paying attention. You mentioned some of the budgetary concerns that will be going on. What are the major priorities for farmers and ranchers in this bill?
Well, I guess nationally, we're really concerned about protecting crop insurance. Our major ask from an Iowa perspective is we don't want anything tied to crop insurance, right? We don't want it to be any sort of hooks into crop insurance or anything that would limit someone's eligibility to participate in the program. We really worry about folks using crop insurance as a stick to force them to do things on their farm, and we really want to protect against that. That'd be the first thing. The second thing would be making sure that our conservation programs are operating the way that they're supposed to and are additive to what a farmer is doing on their land, whether it be, EQIP funds or CSP funds. Also making sure CRP is operating in a way that is effective for the producer and not limiting to, the way we farm here in Iowa. And I would say the other main piece is just making sure that our vital programs are funded outside of necessarily on the farm stuff. So market access programs, trade, all the things that USDA does to help make what we produce here attractive to foreign buyers, right? Or even domestic buyers. So trying to do those things that help our markets expand and grow. So.
One of the things with the Farm Bill that may be a little different than some of the other pieces of legislation is that it's typically a bipartisan and on a regional basis. Just talk about that a little bit, about the cooperation that goes on.
Yeah, certainly. It's not, the Farm Bill is not red and blue. It is definitely regional. And just like all of agriculture is regional, right? People grow different stuff in different regions. And we have some of that in our own state, right? And so, it's important for us to work with, through AFBF and other national groups to make sure that our interests are being taken into consideration and we are helping, ag as a whole, right? The Farm Bill doesn't just cover corn, soybeans, pigs, and eggs like what we have here in Iowa or cattle. It covers all of agriculture. So we have to make sure that the Farm Bill works for everybody and isn't favorable to one region or another. And through our work with AFBF, we really, I think, are in a good place to make sure that's the case. Through the Farm Bill working groups and President Johnson and others working through AFBF to help push forward the message of why we need a Farm Bill, why it's important, why is it important to get it done on time, are all things that are really important to talk to our members of Congress about. The other thing is 40% of Congress has never voted on a Farm Bill. There's 150 plus members of the House that have never voted on a Farm Bill. All 4 of our House delegation in Iowa have never voted on a Farm Bill. Not to say they don't understand ag issues, but it's just this process is pretty unique because it still works through the legislative process. Sometimes a lot of what we do in D.C. doesn't do that anymore. And so it's really important to make sure our members of Congress are educated on what's in the Farm Bill, why it's important, and how we utilize the Farm Bill, and how our producers and members utilize the Farm Bill. So we're working on doing a lot of that, and our members of Congress have been great. They've been very receptive. When we've gone to D.C. over the last year or two with our grassroots membership on our national policy trips, our members have done a great job of communicating to their elected officials why the Farm Bill is important. We've been talking about this, for the last year and a half already, and more of that engagement is going to be needed going forward. So be on the lookout, because I'm sure there will be stuff going out to our members to engage with their elected officials about this issue.
The other issue that comes up every time there's a farm bill reauthorization is the nutrition spending. And we know that takes up most of the spending in the farm bill, but why is it important and why is it Farm Bureau's policy to try to keep the nutrition and the farm programs together?
Yeah, I mean, we call it the Farm Bill, but really it's a food and farm bill, right? It provides, markets for our folks. It also helps provide important nutrition to folks that need it domestically here in this country. There's a lot of different reasons for why you need to keep it together, keeping all those titles together. But the biggest one is there's political realities. Like we talked earlier, it's not a party line. This isn't a party line issue. This isn't a Democrat or Republican issue. This is very regional. It's about how people in Congress see how our food system operates. We need to keep all these titles together. Otherwise, we're simply not going to have a farm bill. And really, you open yourself up to drastic cuts in farm programs should you split them. If you like, having crop insurance and you like having, ARC and PLC and you like having trade promotion authority inside of the farm bill, it's really important that we keep those things together. You really do open up yourself to a lot of political risk should they become divided. So, those are the reasons. But, overall, this is how our food policy operates in this country is through the Farm Bill. And so it's really important to look at it holistically, both on the nutrition side and in the farm program side, keeping that all together.
Yeah, that's great information. You mentioned at the top, we're kind of in listening mode right now, and things in Washington seem to move slowly until they don't, and they want to get on a fast track. So what is the timeline for this process, and when can we expect to see a final bill?
Yeah, it's a great question. Something I've been asking over and over for the last couple months. But, I think right now, the first hurdle is we're going to hit the debt ceiling sometime this summer. Most recent projections say end of July, sometime in August. So there's going to be some sort of deal to figure out how much money is going to be in the Farm Bill. That's really the first hurdle we're going to have to cover. And we won't know that number until probably later on this summer. The issue with that is the Farm Bill expires at the end of September. So I'm willing to bet we'll have some sort of shell, some sort of idea of what the Farm Bill will look like by the beginning, midsummer. And then once we have a final budget, I guess, how many dollars are going to be in that Farm Bill, then I think things will move pretty quickly. Looking at my crystal ball, I would say we're most likely, there'll be some sort of short-term extension come spring or come fall, into the end of the year. And I would anticipate, just like the last Farm Bill, they do a 3-month extension and hopefully get passed in the end of the year, some sort of end of year package. That would be my anticipation. However, I think it's really important that we are talking about how this needs to move quick and this needs to be done this year and on time, because there are some vital programs and things that we really need predictability on. We can't live in a Farm Bill world where we just start doing 3-month or 1-year extensions. The whole purpose of a 5-year Farm Bill is to have that predictability. That way people and producers can know what's coming. They know what the programs are. They can plan multiple years out based off those programs and what the landscape is. So it's really important for us to make sure we get something done and don't just live through a world of extensions.
Regarding that advocacy standpoint, what members can do, how can Farm Bureau members get involved and how their voice is heard during this process?
Yeah, certainly. First and foremost, I know it's about to get busy. I know everyone's about to get in the field. But once you get everything planted, it's really important for, we send out notices whenever our members of Congress are back in the state and going to their town, and they have town halls. It's really important that folks go to those and talk about the Farm Bill. Really, it is vitally important. Hearing about it back at home is really important for our folks. So, engage with your members. If you run into them at church or you run into them at some sort of event, county fair season, they'll be around. So talking about the Farm Bill, how it's important to you, how it's important to your operation, specifically crop insurance and Title I programs, ARC, PLC, those sorts of things. That really is a great way. The other way is there's no doubt in my mind that when things start moving, we will be engaging our membership to reiterate the importance of the Farm Bill to our members of Congress, especially if a vote comes up and it's a favorable Farm Bill, one that we like, which I anticipate it will be. It's really important for our folks to urge our members to vote for it. Not that I think that they're probably on the fence or not in our corner, but they need to hear from you. Those would be the main ways, I think, right now, is when they're back in the state. And if you ever have the eligibility, come on a national policy trip, please do so. Those are really effective. It's good to see them when they're back here, but it's really important for us to go see them in their place, too. I think that it really speaks large volumes and is really powerful to them when we go and see them in their offices.
Yeah, there's always a multitude of ways that members can interact, and Iowa is somewhat of a small universe where you have those chances to see them in the airport or at the county
Absolutely.
fair,
Absolutely.
places like that.
Mhm.
So, Daniel, anything else that members need to know about the Farm Bill?
No, I'd say just stay in tune with kind of what we're putting out. It's been a slow haul so far, but I think things are going to move pretty quick come late summer and in the fall. Hopefully around harvest time, we were talking about how this was a fantastic thing we got passed, and we're visiting again about all the awesome things we got in the Farm Bill. But if nothing else, hopefully around Christmas time, we're talking about that. So we'll see. But, our members do a great job of every time we say we need you. Our grassroots membership really does show up, and be on the lookout because I'm sure that's coming their way at some point in the next couple months.
We certainly have some work ahead of us for this upcoming Farm Bill, and Farm Bureau is going to be right in the middle of it, so stay tuned. You also heard Daniel mention the importance of your voice in the process. Lawmakers need to understand the unique risks and challenges that farmers face, and there's no one better prepared to tell that story than you. That's all for this episode of the Spokesman Speaks podcast. We hope you picked up some useful information and that you'll join us for the next episode on May 8th. Thank you for doing the work that inspires everything we do here at the Iowa Farm Bureau, and thanks for listening to the Spokesman Speaks.
Thank you for listening to the Spokesman Speaks, a podcast by Iowa Farm Bureau. Check out more podcast episodes at iowafarmbureau.com/podcast. You can also find and subscribe to the Spokesman Speaks podcast in the Apple Podcasts app, Google Podcasts, Spotify, iHeartRadio, and other popular podcast apps. We appreciate your ratings and reviews, and we welcome you to email us your feedback at podcast@ifbf.org.